Okay, hello and welcome to our audience members joining us from across the globe. I'm Raymond Karam, the Chief Program and Development Officer here at the Arab Gulf States Institute. We're gathering today as Washington and the region prepare for U.S. President Trump's trip next week that will bring him to Saudi Arabia, Qatar, and the UAE. And to help you all get in the mood for this visit, we're happy to be hosting this discussion on U.S. Gulf relations in the geo-economic domain, inspired by a recently published article titled From Petrodollar Partners to Geo-Economic Rivals, Washington and the Arab Gulf States, authored by Hassan Al-Hassan, who we have the pleasure of having with us today. Hassan is a senior fellow for Middle East policy at the International Institute for Strategic Studies. His current research interests include Asian Middle Eastern relations, with a focus on South Asia and the Gulf, the foreign policies and economic statecraft of the Gulf Arab monarchies, and regional security in the Gulf. Moderating the session is my colleague Robert Mugenlicki, Senior Resident Scholar at AGSI. He created and leads the Next Gen Gulf series, examining technology trends in the Gulf Arab states, and looking east, the China Gulf Initiative. His book, A Political Economy of Free Zones in Gulf Arab States, was published by Palgrave Macmillan in 2021, and he is currently working on an edited volume examining the political economy of sovereign wealth funds in the Middle East and Asia. And with that, Robert, over to you.
Yeah, thank you very much, Raymond. Look, it's a really opportune time to have a good friend and colleague, Hassan, joining us from Bahrain to discuss the geoeconomic dimensions of U.S. Gulf ties right before President Trump heads out to the region next week. Now, as Raymond said, the genesis of this conversation was really my reading of Hassan's recent journal article, where he lays out a case for a geoeconomic rivalry between the U.S. and Saudi Arabia and other regional states. Some of us still read journal articles, and thankfully, some still write them as well. So I appreciate that, Hassan. But on one level, the idea of an enduring geoeconomic rivalry or the emergence of this rivalry, it does make sense and it resonates. We've seen in the early days of the Trump administration unprecedented tariffs. Now, even though those tariffs may not have directly impacted the Gulf states as much as other countries around the world, they certainly have created disruption, and they did upend a number of free trade agreements with regional countries. And we're also seeing an escalating trade war that does have macroeconomic implications and other risks for the region. But this isn't just a Trump story. I mean, we've seen in previous U.S. administrations the use of geoeconomic instruments, whether they're oil price caps, sanctions, different energy policies that advance opposing interests. And all of this, I imagine we'll talk more about many of these points today, but these have created significant consternation across the region. But I don't want to also just classify Gulf states as geoeconomic victims here. I think Hassan's use of the word rivals resonates with a lot of my thinking that many Gulf states are rising geoeconomic influencers in their own right. And this definitely applies to Saudi Arabia, the UAE, and I think in a more narrow sense to some of the other Gulf states as well. And we're seeing this geoeconomic influence of Gulf states play out on a regional level, but also globally. So with all this being said, though, I think the flip side of the coin is that the conventional wisdom is the U.S. and Gulf states have strong historical partnerships. And even more, there's a real sense that the Trump administration and Gulf governments get along quite well. And we're seeing some of the fruits of this relationship at the moment. Talks about Russia and Ukraine are happening in Riyadh, negotiations between Israel and Hamas in Doha. I mean, nuclear discussions with Iran and Oman, and the Emiratis are involved in a number of different domains as well in cooperation with the U.S. And then, of course, we have this much anticipated visit with President Trump headed to the region for his first major trip beyond to the Vatican for the Pope's funeral. So I think that's just very briefly to set the scene. And I'm now going to turn things over to Hassan, and I want to ask, what is the crux of this geoeconomic rivalry that you write about and you've been thinking about within Gulf-U.S. relations? And because it's on everybody's mind, how do you think these dynamics are going to play out in the upcoming trip next week?
Well, thanks very much, Robert. And I think that's a fantastic way to kickstart the conversation. I'm not to get too much into the bromance, but I obviously follow your work very closely as well. And I'm very much looking forward to your upcoming book on sovereign wealth funds because it's going to intersect in many different ways with some of my own work currently on the geopolitics of sovereign wealth funds in the Gulf. But really, to get to your question and to the topic of geoeconomic rivalries and U.S. Gulf relations. I think if we take a step back from really the noise and the upheaval of the current times that we live in, it's really quite a remarkable, I think, development in U.S. Gulf relations. Because if we think back to the 1970s, really the U.S. Gulf relations really rested on a geoeconomic convergence or geoeconomic partnership, the so-called petrodollar alliance. And to think that we've now, 50 years down the line, are somewhat more in a situation that is perhaps similar to the situation in which Japanese-US relations were in the 1980s, or even EU-US relations at the moment, where there is a geoeconomic rivalry that sits on top of a US security of a security partnership and sometimes even security alliance. And I think that's quite a remarkable development, I would say, in the grand scheme of things for U.S. Gulf relations. I think if we look at the broad drivers of this rivalry, I think part of it has to do with U.S. energy independence and the fact that the U.S., since the shale revolution of the mid or late 2000s, has become not only energy independent, but really has become the world's largest producer of oil and gas. And I think that while not necessarily sort of a direct cause of rivalry, I think it causes the US to behave in certain ways and to want to change the realities of global oil markets in ways that might be inconsistent with the interests of the Gulf states. The other, I think, big driver or factor to keep in mind is the intensification of great power competition, especially in the global geoeconomic domain. And I think, we see this in multiple ways. We see this materialize in the way that the US has sought to weaponize the international financial system against Russia and some of its other allies, some of its other rivals. The way that the US has also sought to change the rules of the game in global oil markets to try and put a cap on Russia's revenues, the rise of in U.S. technological protectionism and wanting really to impede on China's technological development in sort of emerging disruptive technology. So there really is, I think, a great power dimension as well. The way that the U.S. has, I think, systematically weaponized the global economy against its rivals, that creates precedents and dynamics that have an impact on its relations with the Gulf states. But I think, to your point, that the Gulf states are not merely victims of U.S. behavior and that the Gulf states are very much agents in their own right. And I entirely agree with that. And I think, the Gulf states' part in this is the growing relations that they've built with China, not just through trade, but increasingly through financial sector linkages as well, are quite interesting. And I think that has also contributed to some of these dynamics that we're seeing at the moment.
That's great. I mean, you mentioned two key drivers. One, U.S. energy independence. I guess we could broaden that out to look at energy policy and energy interests in the U.S. and in the Gulf, and also great power competition and the different manifestations of that, whether it's on an economic level, whether it's technology cooperation and the like. I guess when you look at those drivers in particular, do you see any trends of this geoeconomic friction getting worse in those domains? I mean, where do you expect the tensions to increase, and where do you think maybe there might be room for some of this friction to be smoothed over? Because at least on the energy front, I mean, Donald Trump has really pushed ahead with trying to maximize energy production here at home. Really wants to see lower energy prices, and by and large, we're seeing pretty much a response in line with that in the region. A lot of the decisions that have come out recently on kind of Gulf energy policy and OPEC plus, have supported a kind of downward pressure on oil prices in many respects. So how are you seeing those? How are you seeing those drivers play out, and what direction are they moving in?
Yeah, and I think, the Trump is definitely an accelerant, to my mind, of these frictions almost across the board, really. I mean, almost. They're on some issues, I think it's potentially more mixed, and obviously, it's very difficult to predict where the Trump administration's policies will end up on many of these issues because they're fast changing. But I think the big caveat to remember here is that many of these sort of friction areas very much precede Trump's second term. They even precede, in many respects, Trump's first term. So on the energy bit, remember that Saudi Arabia and OPEC Plus essentially went into a price war with U.S. shale between 2014 and 2016. There's been multiple U.S. attempts at essentially pressuring Saudi Arabia and by extension OPEC Plus into shifting oil production policy in one direction or another. So Trump tried this during his first term in 2020. He wanted Saudi Arabia to lower oil production because prices were low prices were hurting U.S. shale at that point. The Biden administration in 2022 tried to get Saudi Arabia to ramp up oil production and to bring prices down to stimulate a post-COVID recovery and to squeeze Russian finances. And, there are some people who believe that the recent changes in Saudi Arabia's and OPEC Plus's production policies now are partly a result of Trump pressure to try to squeeze Iranian finances and to try and stimulate growth while his painful tariff policies take hold. And so, in a sense, I think, we've seen this that history of the U.S. Try and pressure Saudi Arabia and OPEC Plus into changing oil production policies in one direction or another. You might remember how the Saudis reacted when the G7 essentially began enforcing the oil price cap on Russia, with Prince Abdulaziz bin Salman, the Saudi energy minister, threatening to stop Saudi oil sales to any country that would enforce a similar price cap on Saudi Arabia, even though no one had openly discussed enforcing such measures on Saudi Arabia. And not to mention, of course, the NOPEC legislation that gets brought up, in Congress every once in a while. So I think, these very much precede and are not specific to Trump, but I think on the energy side of things, Trump probably does make things worse. I think partly because his desire to ramp up U.S. oil production again is going to have a deleterious impact on oil prices from the Saudi and Gulf perspective. And I think he's again he will try to shape and pressure Saudi Arabia and OPEC Plus into shifting policy. And if prices drop too low to the extent that they begin hurting U.S. shale, he might start reversing course and ask the Saudis to change production in the opposite direction. So I think this the funny thing is that Trump doesn't seem to see the contradiction and sometimes wanting to lower oil prices, but at the same time asking the Saudis and the Emiratis and others to pump hundreds of billions, if not trillions, in investments into the U.S. economy. And I think this is part of the challenge of dealing with Trump.
Uh,
On the great power
hmm.
side of things, I think, with technology, it's going to be a mixed bag because apparently the Trump administration is now considering easing some of the restrictions that were put in place in the final days of the Biden administration. All of the Gulf states, Israel and others, were put into sort of the tier two category in the U.S. Framework for the responsible diffusion of AI. And I think, Trump is one of the issues I think he's most predictable on is his hawkishness on China. And so the Gulf states could start seeing more pressure from Trump to roll back further on relations with China. And obviously that I think would be another sticking point. So to my
Could I,
mind,
could I, could I ask you on that, Hassan? Where do you think Gulf states would be willing to roll back relations with China if they were asked to do so? I mean, obviously, we've heard CEOs of major, technology firms saying they'd be willing to divest, Chinese partnerships and investments. We've seen a bit of that, G42, a lot in Saudi Arabia as well. So we've seen some indication there in the very kind of sense in the more sensitive technology domain. But then, there's also been signals from the White House that if BRICS, members, new entrants to BRICS are talking about denting dollar dominance, we're going to slap, a pretty pretty high tariffs on BRICS members, of which some Gulf countries, at least the UAE, are part of this group now. So, I mean, we've seen various areas that could present pressure points, related directly or indirectly to China. So, where do you think, if pressed by the Trump administration, some of these regional governments would be more willing to play ball?
So I think, the easy answer so far, and perhaps the most visible area has been AI, right? Because I think the Gulf states have recognized, and most of these sort of announcements that you mentioned actually happened during the Biden administration, where the Gulf states seem to recognize that the U.S. continues to have the edge in AI, and both state-owned firms in the UAE and in Saudi Arabia have been willing to make pledges that they would be, willing to roll back on ties with China. And we've all seen the reporting on how far G42 has gone in terms of really replacing its Chinese developed stack, and stripping out a lot of Chinese hardware and components and personnel from its data centers and so on. So really, I think G42 has gone a significant length in that respect. Now, we have to also, I think, keep in mind that um, the Gulf states, uh, I think that have. S- I wonder sometimes whether the Gulf states might be heading into a configuration where um, you end up having sort of two systems domestically within the Gulf states. One that sort of partners and co-invests with American firms, and another that sort of deals with Chinese firms. And so I think, the instructive case here potentially is G42 shifting some of its potentially Chinese holdings that were problematic from a U.S. perspective to some other vehicle, right? Like Lunate, for example, that's managed by some other entity. And we could also see something similar in Saudi Arabia, where specific firms might be fully geared towards investing in the US, while certain educational institutions might continue to develop partnerships with China. So I think, because of the fast changing nature of the AI industry, I mean, we've had a number of surprises with Chinese firms, making breakthroughs in that very domain. Really, I think the Gulf states have somewhat of an incentive to make sure that they're somewhat diversified on this issue, and that they continue to maintain some exposure to China, because Chinese firms, on the one hand, could make breakthroughs, could overtake the US in certain respects. And I think from a bargaining power perspective, again, I think the Gulf states will not want to be totally beholden to the US. So I think, AI has been one area. I think the Gulf states potentially might be willing to make, and Saudi Arabia specifically, some changes to its oil production policies, especially short-term changes, if they see those as being consistent with their own geostrategic interest. Potentially, the Saudis might now see an incentive, for example, in squeezing Iranian finances to get them to agree more readily to a deal, because that could, over their nuclear program, in return for more sanctions relief from the US, for example, if this were to mean that there is a smaller likelihood of the US or Israel launching military strikes against Iran. And so I think, we could see short-term concessions, for example, on oil production policies. But I still don't think that we are going to see a large-scale reorientation or total alignment on the part of the Gulf states with the US in really any area, because I think there is a deep-seated conviction in the Gulf states that diversification pays. This has become part of their ethos and part of their DNA. I think they aspire to play a bridging role in the global economy. And if we do continue to head towards global economic bifurcation, I think the Gulf states want to be in the advantageous position of being able to do business both with the US, with China, with everyone else. And I think that will give them a lot of leeway and arbitrage, and create new economic opportunities as sort of bridging or connector economies. So I think that this is now part of the Gulf states' deep-seated convictions. The U.S. is an important, but I think somewhat unreliable partner, and I think that message has very much sits very deeply with Gulf leaders, I think.
Hmm. I mean, one of the things you mentioned is that diversification of relations pays, but at least in an economic sense, what we know from the region is that diversification has also been very hard to do successfully. It's taken a long time to link it back at least to diversification away from hydrocarbons. And I think probably that the difficulty would also apply to a genuine diversification of relations over the long term. I mean, you also mentioned under the Biden administration, we know that this administration was really pushing Gulf governments to adhere to strict standards on the technology front to play in the U.S. tech ecosystem, and that there seemed to be a willingness to do so. But I wonder, to your mind, is there a sense in the region that both advancing a diversification of relations strategy with countries like China, and potentially building this, two-tiered or two-system structure where there's a focus on partnerships with the U.S. In one direction, and in the other direction, there's a focus with other players, Chinese companies and others. I mean, is there a sense that this balancing act is going to become more difficult under the second Trump administration? I mean, we've already seen relatively non-controversial forms of economic engagement with China. For example, the BRI related cooperation being kind of thrust into the limelight of great power competition early on, especially with official visits to Panama. So what's the sense out in the region about the best way to actually go about this, and what are regional leaders expecting to hear in terms of demands from the Trump administration?
Yeah, I agree with you. I think that that the Gulf states diversification agenda, which I think is somewhat is very much reported on in the news, especially in areas like technology and so on. And I also sort of look closely at the financial links that the Gulf states are building with the Chinese, things like stock market listings, renminbi clearing houses. Setting up in the Gulf states, Chinese policy banks and other financing institutions, again, setting up in the Gulf states, increasing sovereign investment flows from the Gulf to China. These are interesting and emerging trends. But I agree that they haven't yet, and I think will have quite some time until they materialize into a real shift in the Gulf states' economic relations and dependencies. So I agree. I think the Gulf states are still very much uh, um, uh, beholden to the US dollar. There is no near-term indication that they're going, for example, to depeg their currencies from the US dollar. In terms of stocks, if you look at the exposures of Gulf sovereign investors, North America and Europe and sort of developed markets are still, weigh very, very heavily. So I think it's not as though the Gulf states are going to pivot away from sort of the US centric international trading or financial system. I mean, unless the U.S. scores more own goals. But I think it's not going to be necessarily a function of the Gulf states' own diversification agenda. So I do agree with you that I think um, uh, diversification initiatives take quite some time until they translate into hard economic data and relations. Now, how do the Gulf states sort of ward off pressure from Trump to roll back on ties with China? Um, I think it's clearly not easy, but I think there are a number of factors. Um, I think one thing is to remember that Trump changes his mind very often. And so sometimes it's a question of just waiting out the pressure, right? So um, that I think applies to many aspects of Trump's policies. But I think the amount of policy volatility that we see from the Trump administration perhaps incentivizes let's wait it out kind of strategy. So especially if we do see a further easing of some of the initial positions that Trump took on tariffs, if we see that following the 90-day period, that reciprocal tariffs are much lower than Trump had initially announced, or that Japan or other countries are able to reach settlements or agreements with the United States, or that trade talks between China and the US begin to bear some fruit, then I think this will probably incentivize the Gulf states actually to remain on course. The other, and not to concede too much by way of rolling back relations with China, I think there's a broader question as to how, the Gulf states manage Trump as a whole. And I think this cuts across security as it does geoeconomics. And I mean, think about Trump's position on the Houthis 2 months ago. He had promised to annihilate the Houthis, and now he apparently sort of reached a ceasefire agreement with the Houthis in Oman. Came out again, guns swinging on Iran, and is now sort of leaving Israel out to dry, and might cut a deal with the Iranians that might not be in Israel's best interest. So, in a sense, there is a lot of volatility, and I think the way the Gulf states manage this is by appealing to some of what Trump is trying to do. So I think they've made themselves very useful to Trump's personal and sort of family business interests. And there's been a wave of business deals that were announced with the Trump organization, a number of luxury real estate deals in Qatar and Saudi Arabia and Oman. And keep in mind, I mean, Jared Kushner's Affinity Partners has raised billions from the region. So I think, building these personal incentives is part of the Gulf states' sort of financial toolkit for managing Trump. And I think they've also managed to make themselves useful for some of his, campaign promises on bringing an end to the war in Ukraine or in Gaza. And so they're mediating now. Saudi Arabia is the venue for U.S. Ukraine Russian talks. The Omanis are mediating between the US and the Houthis, and facilitating talks with Iran. And Qatar obviously is still important on the Gaza file. And so I think the Gulf states will find, all of these various tools for managing what is, I think, a very unruly partner in the White House.
Yeah, still lots of work to do on Ukraine, Russia, and Gaza, unfortunately. But yeah, hopefully there'll be some progress there. Look, we've been talking on a kind of regional level about Gulf states, but I mean, in your article, you used the wording Saudi Arabia and other Gulf states. I think obviously we know there are several Gulf states, GCC states plus other Gulf states, but we'll focus mainly on the GCC today. What kind of geoeconomic variation are you seeing in U.S. Relations with various Gulf states? And what are the important distinctions we should be drawing when we're thinking about this topic as it applies to particular states, be it Saudi Arabia, UAE, Qatar, those three countries Trump is visiting, and the other three, you're joining us from Manama. So curious where you're seeing some important similarities and differences in the themes that you've been exploring and laying out here.
Yeah, I think that's a very important consideration, and I do agree that the geoeconomic stakes, pardon, vary quite significantly between the different GCC states. So I think it's easy sometimes for us to get carried away with focusing on Saudi Arabia and the UAE because they're the sort of the largest and most visible actors and players. And obviously, there are certain considerations that are Saudi and UAE specific. So I think most of the frictions on technology tend to be, I think, most acute in the Saudi and Emirati cases because these are the two countries that are poised to invest and to be the most active and ambitious, I think, in the technology domain. But if we think about the other GCC states, I mean, Oman and Bahrain have free trade agreements with the United States, and obviously those have been rendered, rather, I think, irrelevant now in light of the Trump administration's trade policies. Bahrain and the UAE are obviously significant exporters of aluminum to the United States, and they've been hit by tariffs since 2018. With the first Trump administration, the Biden administration kept those tariffs in place, even though they were deemed illegal by the World Trade Organization. And I think to the UAE's and Bahrain's disappointment, they didn't manage to get exemptions on their aluminum and steel exports, even though some other countries did. So I think there is the additional consideration of aluminum that applies to the UAE and Bahrain, and that maybe does not apply as much to some of the other Gulf states. I think with Qatar, there's obviously an LNG and aspect as well. I mean, with with the US emerging as a very consequential source of global LNG. And I think, one of the emerging things to keep in mind, and I'm hearing this in some trade discussions in Washington as well, is that actually some of the deals that we might start seeing could actually end up being sort of preferential sourcing arrangements, right? And so the idea that, for example, the US might begin asking, say, the Japanese to start buying American hydrocarbon exports on a preferential basis means that now the US is sort of engaging in unfair competition with the Gulf states for global oil and gas market share, right? So we could see this, and I think that's obviously going to have an impact. Um, but I think, one thing that all of the Gulf states sort of share is, and I think this applies even more than their. So there are, I think they're all concerned about, more concerned probably about the indirect impact of US tariffs than they are about the direct impact of US tariffs. Because as you know, the Gulf states run essentially a trade deficit with the US. And even though the Trump administration has put in place an exemption on oil and gas commodities, these are a very small percentage of Gulf exports that end up in US markets. I think what the Gulf states are really worried about is the potential impact of Trump's trade policies on global growth, because that translates into lower global demand for oil. And I think they're also worried about redirection of Chinese exports. Now, the Saudis, last time around during the first trade war, were actually heavily impacted. Were I think the G20 economy that was most impacted by product categories by Chinese trade deflection. Now, in terms of volume, it was still very small because most of Chinese deflected trade ended up in the EU or in European markets. But by number of categories, the way that the Saudis reacted the first time around was to actually allow Saudi consumers to reap the benefits of cheaper Chinese products. But I think, where it did hurt the Saudis and other Gulf producers as well was particularly on steel. And I think the case of Chinese steel, which was obviously not just a big deal in the Gulf, it was a big deal in Europe as well, where Chinese steel really began to, I think, saturate and where we saw a lot of Chinese steel being dumped into European and Gulf markets. That I think became a sort of a cause célèbre that continues to resonate and that continues to weigh on trade officials' minds here. So I think there is a shared concern, despite the variation in geoeconomic stakes. There is, I think, a shared concern in the Gulf about more about the indirect impact on global growth and on Chinese trade deflection than on the direct impact of U.S. tariffs on the GCC, which are some of the lowest in the world at just 10%.
Yeah, that's a good point to and worth reiterating. I guess though, when we think about the impact of tariffs on the region, there are two countries that immediately come to mind as being directly impacted, at least in terms of major economic agreements that they had with the U.S., and that is, of course, Bahrain and Oman with the FTA. And I think we've all been trying to figure out what's the right wording to describe where the FTAs stand. I said at one point they're dead but not buried. I think you said rendered ineffective or rendered useless. What are you hearing from trade experts in Bahrain and from government officials about how they're considering the status of the FTA and what they hope going forward? I mean, there's been some cautious statements from the ambassador here in Washington saying, essentially, to me, I read it as we will continue to uphold our end of the agreement. But is the calculation that maybe we can negotiate a deal back down to what we have with the FTA, or we're just going to have to manage potentially a 10%, baseline tariff that would more or less make that FTA null and void? Curious to hear what you're hearing from Bahrain in particular.
So I think we're not hearing much. There's a lot of silence in the Gulf and there's really been, I think, an absence of public reactions across the Gulf states on the issue of Trump's tariff policies. Interestingly, there was an attempt in Parliament in Bahrain to try and slap a reciprocal 10% tariff on the United States, and I think the government, represented by the Minister of Industry and Commerce, who's in charge of trade in the Bahraini setup, came out against it and said that Bahrain will continue, sort of as you suggested, to uphold its end of the FTA bargain. I think the idea here is that um, I think there's a broad conviction that not taking a publicly confrontational approach with Trump might be more productive, and that resorting to back channel diplomacy might be the way to do this. I think there is also a realization that there's simply a massive economic asymmetry. I mean, the Gulf states are much smaller economies than the United States, and so adopting a reciprocal I think strategy might not necessarily end up being in the Gulf states working for in the Gulf states' favor. I think the third point is that the Gulf states don't believe that they have a lot of influence over Trump's trade policy because Trump's trade policy has to do with there's a strategic dimension to it vis-a-vis China, the EU, and others, and then there's also a domestic dimension to it, because it's a big part of his domestic political agenda. And so how much, productively could the Gulf states really try and shape his tariff policy? And then at the end of the day, they got a relatively, less rotten deal than many other countries, including, closer US allies. I mean, Israel has a 17% tariff slapped on it. Jordan has, a 20% tariff slapped on it. So by comparison, the Gulf states actually get away fairly unscathed. Yes, I would imagine the US and the UAE and Bahrain and Saudi Arabia will want exemptions on certain export categories. They might want exemptions on access to advanced technology and so on. So I think they will probably focus their energy on bargaining for certain issues like aluminium, like AI, and so on. That I think probably matter more to them, and I think they believe that their efforts are going to be more productive. The I think there's a broader consideration here is that we can't really totally compartmentalize the geoeconomic part of the US GCC relationship. So, at a time when you have multiple ongoing conflicts in the region, a potential war with Iran if Israel, conducts a unilateral strike, I think Gulf states also have to sort of keep these broader geostrategic considerations in mind as they decide sort of on how to deal with the trade issue as well.
I think that's a perfect segue into my next question. I mean, you've written that the security and defense partnerships with the U.S. are becoming stronger at the same time in which we're seeing a rise in geoeconomic tensions. So, I mean, my question is, can geoeconomic rivals still be close partners and partners that are continuing to deepen ties in other domains? You mentioned the compartmentalization. I mean, do you see these domains, these areas of engagement as operating in silos by and large, or do you envision a scenario where perhaps certain areas of geoeconomic tension could spill over and impact the defense and security related cooperation and those dimension of partnerships?
Yeah, I mean, I see them as distinct but related tracks, and they definitely spill over into one another. So I think you can think about the spillover from sort of from the geoeconomic to the defense and security. And so there was a clear case when Trump essentially threatened Saudi Arabia to withdraw security assistance if the Saudis didn't, change their oil production policies in 2018. So there was a clear sort of linkage by an attempt by the Trump administration to link these two issues. Um, there are, I think, spillovers in the opposite direction as well, where the Gulf states would generally count on their defense partnerships on the fact that they spend a lot of money on U.S. weapons purchases as well as a broad source of political influence in Washington D.C. To get other concessions and other domains, so which could be trade or otherwise. So theoretically, you could see those sort of tracks spilling over in both directions. I think in the past few years, those tracks have become more closely intertwined because of the fact that great power competition is really playing out in the geoeconomic domain, and the idea that sort of technology is both a security and a geoeconomic issue. I think you start seeing these things as more closely intertwined. Um, Interestingly, keep in mind when sort of President Biden decided to do a massive U-turn on relations with Saudi Arabia, which he had, characterized in the most unflattering of ways, and decided to visit Riyadh in the hope of getting the Saudis to ramp up oil production. That was an interesting change in sort of the broad foreign policy under pressure from geoeconomic considerations. So I think I do see them as interrelated tracks, but they are, I think, somewhat distinct in the sense that I think both the Gulf states and the U.S. have a continued interest in maintaining the buyer and seller relationship on U.S. arms and weapons. The U.S. continues to be the preferred partner, defense and security partner for the Gulf states. There is talk that the Trump administration actually during its first term signed a $110 billion, not signed, but sort of had agreed with the Saudis on $110 billion arms package. And during the entirety of the Trump administration, we saw more than $30 billion in FMS sales during that period. And now there is again talk of a potential again colossal arms package that Trump will unveil during his visit to Saudi Arabia, somewhere again around the tune of $100 billion. So I think there is both sides. I think see the value of maintaining that strong defense relationship, but I do think that there are also limits to how far Trump is willing to go on the defense side of things. And so I think you know it was essentially the Trump administration that chose not to take action against Iran for the 2019 attacks on Saudi Aramco's oil facilities that took out momentarily 50% of Saudi oil production. And I think we've seen and we've heard senior Trump administration officials, including Pete Hegseth, the defense secretary, during his meeting with Saudi Defense Minister Khalid bin Salman, again speak in very non-committal terms about the US's willingness to sort of actively defend Saudi Arabia. So I think, in sort of a true transactional sense, the Trump administration might have fewer qualms about selling more advanced weaponry to the Gulf states, but I think are somewhat less willing to commit on an active defense of the Gulf states. The question is, if the geoeconomic tensions were to become much worse, and if the frictions were to become much more acute, could that spill over again into the defense and security realm? I think it's difficult to exclude that possibility.
Yeah, I mean, that's good. That plays into one of the questions from our audience. I mean, it essentially is asked, will the Gulf states always be a transactional partner for the U.S. with choice defense contracts? I mean, you were talking about the big agreements over weapon sales, first Trump administration, now signals of kind of the second one in the lead up to the trip. I mean, I guess two-part question. You did mention the transactional nature of relations, but do you see these defense contracts and weapon sales as kind of directly related to a transactional relationship, or is it maybe something a little bit more nuanced and complex? And second, question that I've heard from a number of folks, here in Washington, thinking about these major kind of defense contracts and weapon sales. It's like in the longer run, what are Gulf governments getting out of this? Because you also laid out some of the concerns about the limitations of the U.S. to respond in different situations, different scenarios, potentially different conflicts in the region. So, what's the calculation there? I mean, what are Gulf governments getting out of this arrangement today, or how do they think? How are they thinking about what they're getting out of these arrangements?
So I think, on the transactional or non-transactional nature of U.S. Gulf relations, I think to its credit, the Biden administration really tried to take U.S. Gulf relations to sort of to become less transactional, and I think more deeply ingrained. And I think there were multiple attempts by the Biden administration to signal stronger U.S. commitment and more long-term U.S. commitment to Gulf security. And you saw that through the signing of the CCPA agreement between Bahrain and the United States. Granting Qatar sort of the major non-NATO ally status, calling the UAE a major defense partner, and negotiating with Saudi Arabia over a binding defense treaty. And so I think that the Biden administration really made a sustained effort to try and provide a more systematic framework for and less transactional framing for U.S. Gulf relations. But I do think sort of in the long durée, so to speak, if you were to zoom out, I do see the US and the Gulf states sort of broad geostrategic interests as being more divergent than converging. So I think, if you go all the way back to 2008 and, Hillary Clinton's talk about a US pivot to Asia. Fast forward to the 2011 Arab Spring and Gulf disappointment with the way the United States sort of was perceived to have abandoned Mubarak, and also, frustrations in Bahrain over how the U.S. handled some of the protests. 2015 with the JCPOA, again the Gulf states deeply unsatisfied, because of the belief that the U.S. Uh, uh, did not really take their own regional interests into account when negotiating that deal with Iran. And then, of course, the sense of abandonment in the way the U.S. chose essentially not to react to the 2019 attacks on Saudi Aramco, and then again a similar dynamic with the 2021 Houthi attacks on Abu Dhabi. So I do, and I think that with Trump, in a sense, the idea that the U.S. is stepping away from its role as the guarantor of the international liberal order, I think is something that is seen both as a major risk, but also as a potential opportunity from the Gulf states' perspective. But I do think it is a source of concern because if you think about the past 5 decades, the international liberal order has actually served the Gulf states quite well. They've grown at a faster pace than the global average. They've grown to become some of the wealthiest and most prosperous countries in the world, partly as a result of their being embedded in this sort of international trading and financial systems that have been underwritten by the United States. And now, the US is changing the rules of the game. Now the US is expropriating and freezing other countries' assets. The dollar is being weaponized. It's now difficult to gain access to US technology. And the US, comes down on you like a ton of bricks whenever you sign any deal or another with the Chinese. So I think this is seen as a source of concern, and I do think that in the grand scheme of things, um, the Gulf states and the US's geostrategic interests are actually more diverging than they are converging. Uh, when it comes to the question of sort of the arms contract and the arms deals, and I think these have been a massive strain on Gulf budgets, right? They cost a lot of money. They're absolutely massive. I do think that the Gulf states eventually want to decrease their dependence on the US from a defense perspective. The Saudis have, as part of Saudi Vision 2030, announced that they would like to indigenize 50% of their total spending by 2030. A very ambitious, if somewhat unrealistic target, but I think it does speak to this idea of wanting to become more self-sufficient when it comes to defense industrial production. We've also seen, I think, clearly a trend towards diversification in the way in which the Gulf states not only source weapon systems and so on, and you're seeing, growing defense industrial partnerships with the Chinese, with the Turks, with the South Koreans. Um, and so I think that does speak to a broad desire to diversify. But as you know very well, it's very difficult to do that in the defense domain because these systems create path dependencies that are very difficult to break. I think without a long-term, dogged, systematic effort to do so. So I think we are likely to continue to see large numbers of U.S. Gulf arms transactions because the Middle East is still a very dangerous and threatening region, and the Gulf states still perceive the need to build deterrence and to continue to keep the U.S. On side, even as they pursue, I think, long-term attempts at building and indigenizing defense industrial production and building a more diverse set of relations that allows them to lessen ultimately their dependence on the United States.
Yeah, I mean, you mentioned how arms deals strain budgets, but we're also looking ahead at an oil price environment wherein if oil prices stay lower for longer, we'll see additional strain on Gulf budgets. And this comes at a time when the White House and President Trump in particular is really asking countries like those in the Gulf to increase investments in the U.S. So I wonder, what is the view in the Gulf? For a long time, obviously, the U.S. economy, U.S. assets have been a safe bet um, for investments and to recycle surplus revenues. Um, is that still the case today? Obviously, we've had the big announcements coming from the Saudis, from Emiratis. We'll probably hear similar types of, figures and calculations of past existing and future investments over the coming days. But I mean, there also have been a lot of pressure on the U.S. economy, reconsideration of the longer term value of U.S. assets, and I'm wondering to what degree that such a view or concerns are trickling through the Gulf and would actually have an impact on some of these investment pledges and frameworks, which none of us really expect to materialize exactly as announced. But of course, they do signal they're a pretty strong signal of an intention to ramp up investments in one way or the other. So how are you seeing that play out?
Yeah, it's again, it's quite wild that the Gulf states are I think that the Trump administration will both and I remember his speech at Davos where he essentially blamed the Gulf states for keeping oil prices high and allowing the Russians to continue bankrolling their war, and at the same time, and the implication being that if the Gulf states were to lower oil prices by ramping up production, that this would be beneficial for everyone. And then at the same time asking them to very specifically get the Saudis to double their investment pledge to $1 trillion without necessarily seeing the tension in these two asks. You're right, the Gulf states have been making big announcements, with the Saudis announcing 500 to 600 billion dollars in upcoming investments. The UAE, not to be outdone, um, um, going to 1.4 trillion over a 10-year period. Now, it's missing a lot of detail, obviously. So, are these going to be fresh injections? Where are they going to be spent? Is it going to be sort of liquidating holdings of U.S. treasuries and other debt and capital market instruments, and that they would sort of shift into equity holdings? There is obviously a lack of very important detail that would help um, uh, really shed light, I think, on the true significance of these pledges. But that's precisely the point, is that I think these pledges are meant to please and appease Trump. Trump is looking for headlines. He has made um, the idea, the notion of attracting foreign investments into the US economy as one of his main talking points on his broad economic and trade agenda. It's all about bringing manufacturing back into the US, attracting investments into the US economy. And so I think, the Gulf states, if are happy to allow Trump, another headline, if it means that that this helps them sort of manage that difficult and sort of unpredictable relationship. So I think I would be tempted to perhaps interpret these announcements primarily at the level of political signaling and strategic communications, more so than as necessarily a very concrete indicator of actual policy intent. Now, that's not to say that the Gulf states haven't done good to some extent on previous pledges. So if you go back, in memory to the first Trump administration, part of the big, $100 billion arms package deal with the Saudis was that the Saudis would invest in U.S. Infrastructure. And lo and behold, the Saudis did put a significant amount of money into a Blackstone fund that was investing in U.S. infrastructure. So I think, neither Trump will be able to fully deliver on his sort of very large arms package promises, and I don't think the Gulf states will be able to deliver on their investment pledges as well. But I think we might see some partial degree of delivery. I do think the Gulf states do have, I think, beyond that, serious concerns about the future of the US economy. And we're hearing some of these concerns filter out from senior individuals, within the Gulf sovereign wealth landscape, because the Gulf states remain extremely, heavily exposed to U.S. markets. And when President Trump potentially talks about the U.S. defaulting in effect on its debts by getting countries to swap their U.S. Treasury holdings for 100-year long securities with at a lower interest rate, that's essentially a default on U.S. debt. And considering that the Gulf states have over $200 billion in holdings that we know of that are public, not to mention the U.S. Treasury instruments that they hold through funds and then through third entities. That I think is a big source of concern for the Gulf states going forward.
Yeah, and I also like to remind people too that the U.S. is one investment destination. You have increasing demands on the domestic front in the Gulf region. A lot of Gulf governments plowing resources into their own economies. You have needs across the region, other emerging markets, other developed markets in Europe, and the U.S. rests in amid other potential destinations for investment. So still has has to be competitive in that sense. We have about 4 or 5 minutes, and I'm going to give you, if it's okay, 3 questions and really push your ability to get through as many as you can. The first is how is the U.S.-Saudi geoeconomic rivalry shaping investment, maritime security, and influence in the Red Sea? So do you see those dynamics playing out in the Red Sea? Second question is, have Gulf states effectively become non-traditional donors, rivaling U.S. tools like USAID in key regions, so potentially filling a gap in needs there? And then finally, do you see what do you see for the future of U.S. Saudi nuclear energy cooperation moving forward? So it's a tall list, but I'm confident you can tackle it.
I think I might pass on the first question because
Sure.
I don't see how I could answer it in really an articulate way. So I'll focus
Although
on
Double
the
I Double S has done some great work on Red Sea tensions, and you should check out their website for reports.
That's very true. So some of my colleagues have put out a fantastic report on the Red Sea and security dynamics. Although, how you bring the U.S. Saudi geoeconomic factor into that equation, I think is a bit trickier. I'd want to be more thoughtful and perhaps defer on this question. The second question on the Gulf states' sort of status as non-traditional donors, we my colleague Camille Lons and I did a really big paper on this issue called Gulf Bailout Diplomacy, Aid as Economic Statecraft in a Turbulent Region. And we put together what we claim to be the most extensive data set on Gulf bailout aid. So this is specifically looking at, central bank deposits, soft loans, and so on that are meant to stabilize other governments. And we've captured over $360 billion in real terms of Gulf bailout spending that has gone primarily to the region, Egypt, Pakistan, Iraq during the 1980s war with Iran. And I think that really puts them on the map as some of the most significant global donors, especially when sort of everyone else is receding. But there are interesting trends as well in the way the Gulf states actually do bailout diplomacy. And so, whereas in the past the Gulf states might put a few $1 billion in, as a deposit in the Egyptian central bank, or buy Egyptian debt or whatnot, they're now turning a lot of their debt holdings into equity and into investments. So we are seeing interesting trends there. But I do think that alongside China, the Gulf states are some of the most interesting and consequential sort of non-Western, non-traditional donors that are out there. And you're seeing this also play out institutionally. So Saudi Arabia is very much now heavily involved in conversations about global debt sustainability at the IMF and the World Bank. On the future of U.S. Saudi civil nuclear, I mean, this was a big area of negotiation under the Biden administration, and it was tied to the Saudi-US defense treaty and normalization with Israel. The US Energy Secretary was in Saudi Arabia, I think in April, and he said that this is something that again is being negotiated, that there would have to be a 1-2-3 agreement. I think the bottom line is the Saudis, the question is what safeguards are the Saudis going to agree to, and will they give up on domestic enrichment? And I think if the US under the Trump administration reaches a deal with Iran that allows Iran to continue enriching domestically, my gut and my more informed colleagues tell me that the Saudis are unlikely to accept anything less.
Mhm. Great. Well, right on the money at 11 o'clock. Hassan, thank you so much for joining us at the end of your day and the end of your week in Bahrain, and walking us through this hour talk about the geoeconomics of U.S. Gulf relations. We look forward to seeing you again soon and continuing to follow your work.
Thank you very much, Robert. I very much enjoyed this, and I hope our sort of listeners and audience enjoyed it too. And thanks again for having me.
All right, excellent. Take care.